I mean, that's why there's only so many people that do development, because it's hard, right? You can't, every day you get a roadblock thrown at you and you have to push through that, figure out the problem, stay persistent, keep your head down, keep pushing through. And in the end, there's enough reward there, right? Which is why people do it.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Brian, welcome to the show. How you feeling today?
Good. Thanks for having me, Peter.
Hey, thanks for being here. So I like to start by having the guests introduce themselves in their own words. So, Brian, who are you? What are you doing? Why are you here? What's your story?
Sure. Brian Green. I live in upstate New York, just outside of Saratoga Springs. So this is also the market that we kind of operate within. But married, 3 kids, 3 girls, so they keep me busy.
Nice.
We have multiple different companies that are all kind of revolving around our primary focus, which is development in our market. So from a business perspective, we're pretty vertically integrated. But my background goes all the way back to, my previous life. I used to own Verizon wireless stores all across the Northeast. Sold all those off in like 2014. And then in 2015, we started buying small and medium-sized multifamily properties, kind of figuring out the property management game. At that time, I was kind of like just operating solo and kind of trying to do everything myself, everything from, figuring out how to write up a lease to actually at one point, I actually bought a snowplow and put it in my truck because I thought I was going to be that landlord. So I was maintaining.
I know a few of those guys, yeah.
Yeah. That the snowplow lasted less than 12 months. So then I got rid of that. But I was, you do all the things in the beginning to kind of figure out the game. But as things have evolved, I brought on a couple partners, including my brother, and we've started to scale. And then in the last year, we've kind of spun off our construction division, which was internal, and now they're a self-operating company. And so we have the construction company, we've got a development company, property management, since we do all that in-house. And then we also spun off a real estate advisory firm, which focuses on like commercial mortgage brokerage and kind of asset management for developers and investors. So we got a little bit of going on, but
That's awesome.
My primary focus is on development and the property management company.
Gotcha. Okay. Well, God, sounds like there's an evolution to when you started to where you're at today, and you got a lot of cool stuff going on. So this should be a great conversation. Well, let's start by how did you transition from Verizon owning those stores to getting into the multifamily? It sounded like maybe the syndication side, or I don't know if you were buying them yourself back in those days. How did you make that transition? What was the introduction? What led you to want to do that?
Yeah, to be honest, I wasn't expecting to sell the old company. It was kind of one of those just we were right offer at the right time for a price point that I couldn't turn down. So I sold those in the end of 2014. Didn't really know what I was going to do next. Had a decent amount of cash at that point. And then I just started reading a bunch of books, trying to figure out what I wanted to do in my next career, I guess, for lack of a better term. I did the whole rigmarole where you meet with like wealth advisors and they're going to tell you how you're going to make 4% and, you're not going to spend your principal and you're going to buy like index funds. And I'm at that time I was, 34 years old. I'm like, I'm not going to like just sit around all day and make 4%. So, I kind of went through that iteration, and then I found real estate, right? I was just from reading books and trying to figure out what I wanted to do. It made a lot of sense to me. I could use my own capital. I could manage it myself. I'm a guy that's never really worked for anybody else since I was in college. So I knew I wasn't going to like go work for corporate America or do something of that nature. So I had to start my own thing. So I just jumped into the game and started figuring it out. So at first I was funding everything myself. I bought my first 4 or 5 buildings, just doing everything myself. I, eventually brought on, a friend of mine to do some leasing and showing for me. But I did that for about 3 years before I brought on my brother as a partner. And then we just started buying, bigger and bigger buildings, and then eventually using other people's money. We actually didn't start doing syndications into the last couple of years, just when the projects got so big that, our personal balance sheets couldn't carry them on their own anymore. But, we went for the first, 7 or 8 years without we're using our own capital and just using private notes from family and friends.
Wow. Now, was that all local to you, or did it start to expand out from where you live there, or what would that look like?
Most of it's local. I think that, m- I think I understand the argument about like, going to other markets, maybe the economics or the demographics might be better, but I've always thought of like, this is my home market. I know this better market better than anybody. Like
Yeah,
that's my advantage. I can drive to any of my properties within 60 minutes. Everything's kind of geographically located. I know the politics. I know the economic development stuff. I know all the players. I know my competitors. So we get great advantage from kind of staying within our geographic location. Although in recent years we've spread out um, throughout our entire MSA. So we're part of the Albany, New York MSA, which I think is about 50th in the country. So it's decent size. It's 1.25 million people or something like that. So it's not small. It's just kind of one of those forgotten secondary or tertiary markets where the big guys kind of avoid these areas, which is fine with me. They can,
sure.
we'll clean up as much as we can here.
I always think it's important to put that into perspective for people, that's what breeds opportunities. A lot of times investors want to gravitate towards those larger markets. And I think, and there's certainly a percentage of the portfolio should be there probably, but
Yeah,
it's those secondary, tertiary type markets where, with the right person like yourself who knows that area, it could be very, very successful, and you can actually find deals. It's not like
that's right.
areas where
Yep.
it's
Yep.
extremely competitive. You probably have to overpay to get in, that kind of thing. Yeah, so I like that. Well, there's a comment that you made about kind of you were doing everything. It sounds like wearing all the hats in order to really learn the business, which I think is a fantastic way to do it. And I'm sure it wasn't just learning the business, but it was probably learning a lot about yourself too, right? And what you wanted to do, what you wanted to focus on, what you wanted your day to look like, all that kind of stuff. And it sounds like
Yeah.
you've evolved from kind of picking up those multifamily, value add, I'm assuming, type properties to now development. Let's speak to that. What did you learn about yourself along the way? What did you want to focus on? You brought your brother on, and it sounds like some other team members and all, where they probably started to do some things that maybe you didn't love to do. That kind of thing. So let's talk about that for a little bit.
Yeah, I mean, I think at first you just do everything because you have to, right? I mean, like
Yeah, sure, exactly.
you don't have enough scale there to afford like a professional support staff. Plus, to your point, I think it's valuable to kind of figure that stuff out as you go. The impetus for our property management company today is me fumbling around for 3 years when I first started and kind of figuring it out, right?
Hmm.
So I think the evolution went forward, and at first it was like, all right, let me figure out what I like to do, what I don't like to do, what I'm good at, what I'm really not that good at. And I just started outsourcing one thing at a time. I think I mentioned before, it started with showings and doing leasing work,
Hmm.
which was my least favorite activity, like going out and showing the respective tenants, the apartments, and pre-screening people and that whole thing. So I started there, and then when my brother came on, he took over all of the oversight of construction and maintenance,
Yeah.
which is another thing that like I know is a part of the business, but like it's not something that like juices me up. So then I was able to focus more on the logistics of the property management company, um, building out that team, and then also obviously focusing on deal flow, and then eventually investor relations, raising capital, and then development, right? Where that's a whole set of skills in itself. So
Sure.
I just kind of figured out over time, like these are the most valuable activities that I can do. This is what I'm good at. This is what I'm not good at. And I just started outsourcing what I wasn't good at and focusing in on the stuff that kind of paid.
Yeah, yeah, that's great.
Yeah.
Fantastic way to do it, right? Especially over time, as you said, as things get larger, it's just you have to be able to delegate in this business. To your point, about not working for somebody else. I mean that kind of thing. Like I think a lot of people are attracted to this space because they can have that freedom of time, but also like freedom of working for themselves. I mean, not having to work for somebody else, that kind of thing. But
Yeah.
that doesn't mean you don't have to work with other people. This is a team
Yeah.
sport, right? So it's
Yeah.
you still got to play well with others and development, I'm sure as well. Let's talk about that because that's a lot of development is orchestrating a bunch of different people that are good at what they do, from architects to engineers and the construction side, you name it. So, when you say development, what are we talking about? Is it ground? Are we doing raw land? Is it residential? Is it commercial? Is it a combination of everything? What's that look like? Talk to me about that.
Yeah, it's a combination. We still will do, still a big part of our business is the value add type stuff, right?
Okay.
Although we're usually doing properties that have a heavier lift than just your normal laminate floors and, counters and paint.
Yeah.
So normally if we're going in, I call it, heavy value add, where, in some cases we're spending 50, 60, $80,000 a unit to kind of turn the whole building around.
Mhm.
So we still do a bunch of that on kind of mid-size multifamily properties. And then as of late, we got into ground up construction. The largest project to date is about 80% complete right now. And that
Nice.
involves building 36 new apartments, and also, strangely enough, relocating an old house that was historic in the middle of the lot. So we did
Nice.
like I don't know if you've ever seen House Movers on
Sure.
TV. We picked up the houses and moved them to the
Yeah.
front of the lot and subdivided it. So we're doing our old renovation work on that historic building, and we're turning those into condos to sell them off, and then we have the apartments behind it. So we're doing a little bit of everything. I feel like in this market, the more tools you have in your tool belt, the better off you'll be. I mean, to go out and just kind of underwrite 1990 stabilized, mid-sized multifamily, like I don't know how you make any return on that right now. So for us to get the investment return for us and our investors that we're seeking, we have to be more creative than that. So that's leaning into development, that's conversion projects, that's historic tax credits, grants, whatever we can get to make this financial soup make sense.
Yeah.
That's what we're doing right now.
Well, you make a really good point there. And I think sometimes investors get lost and they want to invest in companies and outfits that are very, very singularly focused, and that's all they do. It's like McDonald's. All they do is flip hamburgers all the time.
Yeah.
But I think you lose a lot of perspective there, and especially you lose like somebody like yourself with like local industry knowledge. Like I've spent time in commercial brokerage. I know a lot of the local developers here in the Philadelphia suburbs.
Mhm.
I don't know any of them, to your point, that just does that one thing over and over again. There could be times in their career where they focused, like I know some that really made a killing in industrial to office conversions in like the 90s and early thousands and all, when that was really hot. They couldn't keep doing that, like they'd be out of business
Oh,
now if that was the case.
yeah.
I mean, so they transition, and they get into building subdivisions, or they get into building retail and shopping centers. And I feel like really good investors, especially if if they say to themselves, I'm going to stay in this local area. Like you said, the Albany MSA, this is my sandbox. This is where I'm going to play. Then you need to be flexible. You need to be able to ebb and flow with the market. When residential's not looking so great, I mean, you go over to commercial, and commercial's not, then there's all the different flavors, obviously, of commercial.
Yep.
It's just, I feel like that's such an important aspect that kind of gets missed when people get so much, where it's like, you're doing this now, or you're doing that now. And to your point, and I'm sure you know this too, because it sounds like you have the commercial brokerage side and all. There's differences in operating, certain types of buildings and things like that. But at the end of the day, a lot of the core competencies of the value adds of the construction side, the property management side, there's a lot of similarities too. So it's like, if you,
Sure.
how have you been able to navigate that space? Like I'm curious, like even moving the buildings, which I've seen that happen, a few times around here, because there's a lot of historical areas in Philadelphia, in the suburbs. Amazing process of doing that. How were you able to learn that? Same thing with the development side, going from the value adds to the new construction. How have you been able to evolve over time in your career? What is it? What's the skill set? What does it take to learn how to do that?
Yeah, I mean, I think most of development is basically just having a vision, having some persistence. It's problem solving when it comes
Yeah.
down to it, right? So like that project I just mentioned, where it's ground up construction and moving the houses, like originally the plan was to tear the houses down and just build apartments, right?
Mhm.
But that was our first ground up construction. So even then I understood that, like, I don't know what I don't know. So I hired on a financial consultant that specialized in ground up development and sourcing debt for those type of projects to help us model it out.
Nice.
My background, I've got, my background's in finance too. I do most of our underwriting, but I had never done it from a ground up perspective, which is slightly different than just doing it on a value add project.
Sure.
So I brought him in, and just basically paid for his expertise, right? So,
Hmm.
all along the way, that's kind of what we did. We brought in an owner's rep for construction, and he helped us kind of go through the selection process for architects and engineers.
Hmm.
So, anytime we have a blind spot, I'm going to bring in an expert that's been doing this forever.
Yeah.
I'm going to pay them to help us, and then in that process, I'm going to learn how to do it. And then
Sure.
next time we don't need that expert, or maybe we do. So maybe it still makes sense. But I'm always open to being aware of the fact that I don't know everything I need to know. Right.
Yeah.
So like, there's always somebody else that's done this before. That's who I'm going to bring in. That's who is going to help us support the project. But in the end, like as the developer, I still have to have the vision, right? So like we're sitting around a conference table with the architect and we're being told by the city we can't tear these houses down. And everyone's looking at each other like, all right, now what? Is the project dead? Like, what are we doing?
Yeah.
So then there's gotta be one crazy guy in the room that says, like, hey, why don't we just move the buildings? And everyone looks at you like, I don't know, we've never done that before. I'm like, all right, well, somebody has. So let's run that down. So it turns out 30 miles down the road is a guy that moves houses for a living. His family's been doing it for 50 years all over the Northeast. Great. Let's bring that guy in. How much does it cost? What does it look like? And then you just keep going down the iteration of problem solving until you get to an end result. And I think most people won't do that. I mean, that's why there's only so many people that do
Yeah.
development, because it's hard, right? You can't, every day you get a roadblock thrown at you and you have to push through that, figure out the problem, stay persistent, keep your head down, keep pushing through. And in the end, there's enough reward there, right? Which is why people do it.
Sure. I almost want to just pause a second to let that sink in, yeah, because that was such a great mindset, a perspective like that. That's if you want to be successful in this business, everything you just said right there is something that you need to embody and something you need to embrace. And if you can't, it's just maybe like you said, maybe that's not the right thing for you. You know what I mean? But that's exactly the way that you do it. And there needs to be somewhat of a we've been, like the kind of theme we were talking about with knowing yourself and that kind of thing, and there's a humbleness to that as well. And I feel like a lot of times people in the business aren't always so humble, and that's where they let their egos get in the way, And but to your point, this is not a business where. And maybe there's I hate to use the word never, you know what I mean? Like maybe there's some kind of new construction or something like that where it's never been done before or something, but chances are like 99.9% of those they have been done, right? There's somebody who has done it, and you can find that person, and then to your point, pay them and pay them for their consulting, and you're gonna learn a lot, and you're gonna not have to learn from the mistakes you'd have made and the money you'd probably have lost if you tried to do that all on your own. So I think that's such an important mindset, shift and perspective change. And would you say it's necessary, like you said, in order to, if you want to thrive in this one, in your sandbox in that one MSA, you got to be able to do that, right? Because like you said, you're not going to be able to just find those 90 vintage ones, just do that over and over again, until you croak, right?
Yeah. I mean, yeah. So generically speaking, our goal is to get to, 200 million in assets by under management by 2030, right? Like, so it's what, to repeat what you just said and what I said earlier, I'm not getting there by going out and finding 10 different 50 unit 1995 apartment complexes that I can bid on and get successfully without everyone else overpaying. And I'm never going to get there in 4 years. Right. So we have to be creative. We have to do bigger projects. We have to do different projects. And we have to keep our eyes open to opportunities. Right. So that's the kind of the way I look at it. Although we still kind of skew very heavily towards multifamily. So even when we're doing conversions of like an old warehouse or a downtown building or whatever, the focus is still like how many apartments can we get in there.
Sure.
I'm not going all in on like commercial retail or office space or office conversions, because most of those don't work. So I'm still focused on a niche, but I'm
I like
doing
that.
it.
Yep.
I'm coming at it from 5 or 6 different ways.
Different angles and all. Okay, yeah, that makes a lot of sense, and probably easier for some people to mentally grasp. But I like that a lot. There's kind of that singular focus, but there's multiple ways of coming at it in order to achieve that. Talk to me about finding the opportunities. It sounds like that's evolved a lot, and to the point now where I think you said you even have a commercial brokerage arm of the company and all. So how are you finding opportunities? How are you sussing them out? That kind of thing. What's that look like?
Yeah, I mean it's all of the above approach, right? So a lot of it is broker relationships. So I think that in most MSAs that are our size, I mean there's probably 10 players that are brokers that actually handle all the deal flow. So relationships with those 10 individuals, keeping in touch with them every month, letting them know what our buy box is, giving them quick feedback when they send me a deal instead of just ignoring something that comes into my inbox. I think it's building those relationships so that they know we're somebody to be taken seriously. We can perform, we can execute, and we're going to give them feedback at a minimum, even if we're not going to make an offer on property. So that's primarily where we get our stuff from. Historically, before the last 3 or 4 years, the MLS has had some stuff on it that we can kind of pick through because we can see things that other people aren't looking at, or the dirtier the better, kind of in our world if we're going to fix it up, right?
Yeah.
But I mean, if you go on the MLS today, there's literally no listings. So mostly it's brokers. We've got some internal acquisitions people that kind of make calls for us, direct to owners. We do mailing campaigns. It's a little bit of everything. At this point, we've kind of established ourselves in the industry and our market. So, we'll have architects send us stuff or attorneys. So the goal long term was like have a self-fulfilling deal flow, right? Where we're not proactively having to look for it, and we just have deals coming to us and we can pick and choose what we want to do. So I think we're not there yet, but we're getting to that point. But I got the deals coming for me from all different angles, and some of it's from other maybe they want to partner with us, so we're starting to explore those type of opportunities on bigger deals. It's all of the above.
Yeah, no, it's you got to have many different channels for where it's coming from, which I'm sure is kind of similar on the marketing side of the business. You said investor relations has become a role that you've stepped into, and what's that look like? How's that been? Since you have such a geographical focus, do you tend to do a lot in your area, or do you find that kind of going on the internet, stuff like this allows people from all over the country to invest and benefit from like the Albany market and what that, diversification to a market like that could have to do for them? What's your approach look like? How's that been over the last couple of years? I know there's personally, there's a lot of challenges with things going on, shakeups and multifamily and commercial in general with interest rates and stuff. So let's talk about that.
Yeah. Yeah. So, I would say that 90% of probably 95% of my active investors I have a personal relationship with, right? So and most times that started before they became our investors. So these are people that are local to the area, it's friends, family, friends of friends. They're kind of in the next circle away from like my inner circle type of thing, social circle for lack of a better term. Some of that is twofold. Like I'm not the salesy type of sponsor that's going to go out and say, "Hey, you got to invest in our deal," and just talk to anybody and anybody. Like when I started bringing on and building our team and bringing on investors, the mentality was like, "Hey, listen, I want to give a platform for our friends and family to realize financial freedom in whatever definition that person has, right?" So, and I'm also looking at it as a partnership, right? If we buy a building, we're long-term investors, right? So we buy a building, we want to return capital to investors as fast as possible, right? So they can get that infinite return model, they can get that velocity of money, and then they can kind of keep dumping it into our next projects. And then we can just kind of keep recycling the same cash, and everyone kind of gets that, equity bump over time. So I know that if I bring in an investor, they might be my partner for the next 10 years, right? So we're very specific in saying like, all right, that's why we say it's friends and family. Doesn't mean I can't make new friends, but we got to be on the same wavelength, right? Like I feel like lots of times sponsors make the mistake of taking any money or the first money that comes to them, right? You should not do that. You should make sure that you are completely aligned with your investor. So they have the same investment philosophy as you do, right? Like if I'm a long-term investor that's looking for equity and trying to get to assets under management of 200 million, that means I need an investor that also wants to grow their net worth and, is in it for the long term, right? I can't find an investor that is focused on cash return and immediate cash when you're doing
Sure.
development deals, right? It's not going to be a marriage, right? It doesn't work.
Yeah.
So, I guess it goes twofold. We're trying to interview each other at the same time, right? So
Yeah,
I mean, a
exactly.
person that's interested, they're interviewing me, I'm interviewing them. We both can make a decision on what's going on. And I feel like too often sponsors uh will just default to take the money if the person wants to invest in them, which is not doing the investor any service, right? You need to like educate them, make sure they're aligned,
Yeah.
go through that whole process. But to your original question, I think it's been organic. I started networking with potential investors before we needed to start raising money. So, we put together like I guess generically speaking, a credibility packet 2 years before we started really raising. We'd send out newsletters and updates and, I'd have one-on-one phone calls, which is kind of my preference over some generic webinar format.
Sure.
And we just organically kind of built it out. And, now I'm in the process because we're looking at even bigger deals. I'm in the process of trying to level that up a little bit where I'm talking to other operators that might want to come in and on our GP, raise some capital, provide some other expertise, or engaging with family offices, because if we're going to do some of these $20-30 million deals, that requires 7, 8, 9 million in equity, right? So I got to make sure that I have at least a couple people on the bench that can write $1 million checks,
Larger
right?
checks, yeah.
Yeah. So that's kind of the iteration we're in now. Although I still want to make sure it's that friends and family feel. And then I'm not partnering with somebody that is going to go sideways in 6 months, a year, or et cetera. So I just want to make sure we're aligned.
Yeah, I think it's crucial. And to your point, it's an interview on both sides. I mean, I've said this a lot to investors. It's like if the other person that you're talking to isn't asking you questions, that's a red flag. You know what I mean? Because it's like they just take anybody's money. And as long if it's a 506B, if you're accredited, you can check the boxes, that kind of thing, or show the proof.
Yeah.
It's like they'll take your money. And the other thing too is for people like us who are raising money, if you might think you're doing yourself, service in the sense that you need X amount of dollars to close the deal or to fund whatever you're doing. But when you take somebody in and there's not that alignment, chances are they're going to find out eventually, right? Like when the checks don't come in, or when their expectations are not met to some whatever degree, and now you're going to have somebody who's maybe pissed off, maybe, or disappointed, or whatever it may be, and who wants that? You know what I mean? This is not the kind of business. There's enough stresses on the operation side, on finding good deals, on vetting the deals, due diligencing them, the construction, the property management, like you said, development. There's always things that are coming up on a daily basis. The last thing you need to do is add stresses on that side of the business as well. You know what I mean? So if the more that you can nip that in the bud, the better. So I think that's such an important aspect. I'm sure the family offices are good for you as well, because that long-term approach. You know what I mean? Unfortunately, for many different reasons that I understand to some degree, I feel like a lot of retail investors aren't necessarily thinking that long approach. Maybe now more than ever they should be, because the days of 2019, 2020, these multifamily deals down south, or in certain pockets that or exiting in 12 months, 24 months, that's over. You know what I mean? But the other thing too is, like, I think when investors mature over time, they realize, okay, that's great, I got my money back and I made a nice return along the way, or hopefully, or hopefully you just got your money back, period. And now I got to find something else to do with it. Yeah, and it just becomes this constant, and now the passive investing isn't so passive anymore. Now that becomes the active side of it, where you're constantly looking for new deals. And then too, maybe even the people that you like might not have deal flow at that time to line up with when you have capital to deploy, that kind of thing. So I think sometimes those, the longer deals, the longer relationships, if they make sense, can be very fruitful for both parties. But I feel like, to your point, I think a good conversation, or actually many conversations, can never outweigh, like, or shouldn't outweigh the webinar kind of thing. You know what I mean? I feel like the webinars and that kind of stuff, it serves a purpose, And if they can learn as much as possible before getting on a call with you, it's going to breed a better conversation. It's going to be deeper questions and things like that. But to your point, it shouldn't be a replacement. I hear some people where it's just like, it's almost like the call should just be, okay, where do I write the check or the wire or something like that, or how do I fill this paperwork out or something. And it's just like, to your point, I completely agree with you. I think there needs to be more than that. You really need to understand. And I don't like surprises, and I like to make sure other people don't as well. So I think that's a very important aspect, and it might take a little longer, or it might be a little bit more of a long-term approach, but you'll probably find, you'll be everybody's going to be a lot happier doing it that way. Well, what's next for you? I mean, that goal to 200. How do you see it through new development? Do you see it through a combination of the larger kind of redevelopment, the heavy value add projects? What does that look like? What's your plan? What do you see in your mind's eye to how you're getting to that goal?
I think it's all of those things probably, but I know that it gives us maybe 4 years. So in my mind, I know hypothetically, if we start a new development in process, like every year, like one big one, along with some of this, medium sized type projects. So when I say medium size, it could be 3 million to 6 or 7, right?
Mm-hmm.
So I'm not going to take those because those are some of the most profitable deals we can find.
Mm-hmm.
So we're going to continue to do those, but I also know that I need to layer in like something between 15 and 25 million in a new development,
Yeah.
probably every year,
Yeah.
from now until 2030. Realizing that it might take, 2 or 3 years to get those kind of
Sure.
up and ready to go once you start the process, depending on what municipality you're in and how complex the deal is. That I guess with that math, it might put me past 2030, but I'm one of those guys where if you set the goal, you usually achieve it before your deadline is.
Yeah.
And I think if I get to the end of 2029 and we're at $150 million with, 60 million about ready to go into development, I
In the
think we'll be good
pipeline.
with that. Right.
Sure.
Yeah. I think we're fine with that. Yeah, I know that we need to scale up though. Right. I know we need to do more of these bigger deals. But I think, we'll be at 50 million by the end of this year. So we basically need to 4x over the next 4.5 years, but I think it's incredibly doable.
Nice. Well, what's the Albany market? We talked a lot about that, but let's get into the specifics a little bit, just to kind of paint that mental image of what it looks like. Where is I think the Mid-Atlantic, and those kinds of markets, we're in the same, we're in Philadelphia and Baltimore and South Jersey. We have not seen this massive development boom that the South has. I mean, so to your point,
Sure.
when you go on the MLS, it's hard to find stuff. And I mean, it's not, it's not easy to find it. And when you do, especially normal, I'm not talking about like, the distress stuff necessarily, but like your more normal stuff, people are still bidding over ask price and, still waiving inspections and things like that. Have you found like the supply and the demand in Albany is the same way? What do you think some of the driving economic factors are and things like that and all? What's it like?
Yeah. So, I think you're probably seeing the same thing in the Philly and Jersey markets, but, it's obviously more difficult to build in the Northeast. There's more rules, there's more regulation, especially the local municipalities.
Oh yeah.
It just takes longer. I mean, if you're down south, you can get something permitted with shovels in the ground in 6 months. Like that's never happening up here. I think that's why there's a chase to so many of the stable or in place assets, right? Because you wipe out those whole 2 years, right? So you can either do a development project, which is way more work, wait 2 years before you get a shovel in the ground, and then wait 18 more months before it's stabilized and you start getting cash flow. Or you can go find the 1990 project and maybe pay on offer on a 5 cap instead of the 6 or 7 it's supposed to be. And you're willing to take that or overpay that, right? Because you're removing the 24 months of pain on the development side, right? So I think people are just chasing a scarce amount of assets. And that's what's kind of driving that. But I also think it's because on the flip side of things, like you're probably seeing this too, your current assets you already have, we also don't have huge swings in rental, right? So like
Sure.
We're still trading out leases this year at like 10% increases, right?
Yeah.
So because the supply is so constrained,
Sure.
and our renewal rate is like 70%.
Yeah.
So you're not getting that right now in Southern Florida or in Austin, Texas, or Boise, Idaho. All those places are down like 20%. So I think it's just like, we're one of those stable markets where it's difficult to build. Probably long term, that's not really great for tenants, right?
Hmm. Sure.
But also within our MSA, we do realize that we're not buying in every submarket, right? So like we will not buy or build anything in the city of Albany. Uh, that's like, they have rent control. Everything
Yeah.
has to be some percentage affordable. So we're in the suburbs. I call it, places you'd want to live type areas. And that's where we're going to develop. But to the point, there's a lot of places like Albany in the Northeast that just make it really difficult for a developer to want to go in there.
Yeah.
If you stick so many constraints on it, make it so expensive and limit the income that you can produce, why is any developer going to choose that market? So at some point, these local municipalities and politicians will figure that out. But as a developer, I'm going to go where the grass is greener, and I'm going to go where the returns for the same amount of work or less justify the investment.
Yeah, that makes a lot of sense. I mean, and to your
Yeah.
point, it does breed some opportunity in the sense that there's not a ton of new supply going on
Yep.
market, but it also kind of to your other point of having to do that combination of new construction, the new multifamily, new development versus those value adds as well. We got that marriage between the two makes a lot of sense, especially where you're at in your career and the goals that you have and that kind of stuff, because if you're just focusing on one or the other, you really have to beef that pipeline up pretty good. Because, like you said, it could be 2-3 years before you're breaking ground on that deal because it's just going through the zoning and entitlement process and that kind of stuff. And it's the Mid Atlantic, Pennsylvania, Jersey, Maryland, even. It's just overall there's a few pockets here and there that are more development friendly, but typically there's a reason for that. I mean, typically it's like they're hurting for tax dollars. You know what I mean? Like they need that, and chances are they're the markets that you're taking a little bit of risk in because there's probably not a ton of people living there now. You know what I mean? So you're hoping that the path of development's going that way and that kind of stuff. The markets that, there's people, that kind of thing, that's usually where they seem to be a little bit more challenging. And to your point, like the cities and stuff like that can just be off the charts. But it's funny, like the governor race in Jersey's happening right now. And like I just saw data a couple weeks ago, like Jersey's still 60% less inventory than there was pre-COVID. Houses there are selling incredibly fast, way over ask. They're still waiving contingencies and things like that. And they're saying, and I've heard some of the commercials where it's like, we need to stop development. It's like, you already have. You know what I mean? Like, you don't need to stop it anymore. You need development. I mean, it's just like, and then people, I guess that turns some voters on. But at the same time, it's like people need to realize like that has a lot to do with the affordability crisis that's happening. When you don't have new supply coming on, it just makes the existing supply more and more expensive. There's just more people going after the same stuff. Where interest rates are and all, you still a lot of people who are kind of stuck in their home because they don't want to, trade a 2, 3, 4 rate with what's happening now. So it's you need to have that new supply. I think too, like new development has the benefits of it's new. You know what I mean? And in those markets where there's not a lot of new stuff coming on, it's just like, I don't care what some of the metrics are and things like that. When you have new product in a market where a lot of the product's 20 plus 30, 40 years old, I mean, in some cases, even older than that, there's something to be said for that. You know what I mean? There's a demand for that. You know what I mean? It's, who doesn't want to live in a new place compared to something that's a little bit more vintage where, you're going to have those, deferred maintenance issues and things like that as a tenant, right?
Yeah. Plus, when you add that new supply, you naturally increase the entire market supply, right? So that will trickle down to, I hate to use that term because people turn off when you say that, but it does go down to like the C level, B level, right? So
Sure.
by adding the inventory, it makes those naturally more affordable.
Yeah.
Because there's pressure on the top, and if you get a bunch of A's, then like the A's, kind of press each other down, and it goes into the B's, it flows all the way down.
Yeah.
Instead, what we have is a situation where it's incredibly hard to build, right? So if you are going to build, it's definitely going to be A, but they're not able to build enough. So like then we get into this artificial world where now we have to subsidize affordable housing, right? Because we've made the rules over here way too hard. So now we have to grease the developers so they actually will build affordable and give them taxpayer money to do it. So like you're creating your own problem and now you're having to solve the problem. It's like this whole cyclical thing. And the problem's only going to get worse, right? I'm sure you've seen a lot of the industry information too, because nobody was starting new developments during COVID, right? So there was like 4 years there where like everyone put pencils down, and then when rates shot up. So like when you get into 2026, 2027, there's going to be a lot less product coming on the market, especially in multifamily. Maybe residential will be different because it doesn't take as long for them to kind of start building houses. But you're going to have even more of a supply problem once you get to those couple of years, just because it was so expensive that nobody was starting anything new during that kind of 24-month period.
Yeah. Well, Brian, this has been a great conversation. I could talk to you all day. There's so many different angles, things we could talk about. But yeah, I say let's leave it there. I mean, this has been a wonderful conversation, and really like what you're doing. For the listeners that like what you're saying, want to learn more, want to get involved with you, how can they do that?
Sure. So our company name and website is greenspringscapitalgroup.com. If you go on there, you can reach me. Happy to talk to anybody about our portfolio, our projects. We've got a really interesting project up in the city of Glens Falls that's under contract, and we're doing a lot of due diligence on right now. Involves, to our point again, grants, tax credits, the whole deal, conversion of an old warehouse. So it's one of those deals that if everything comes to fruition, it's going to be great for our investors and for our team. So Green Springs Capital Group, if they want to reach out.
Cool. Well, Brian, thank you so much for being here. Really appreciate you joining me, and really enjoyed the conversation.
Yeah, you as well, Peter. Thank you.